Now, even though JEPI or the JP Morgan Equity Premium Income ETF is one of my original favorite high income oriented ETFs that I've held on to for several years now and own several hundred shares of. In the last year or so of investing, because there's so many great high income ETFs now available throughout the market, even though I'm still a fan of JEPI, there are now other high income ETFs I'm much more of a fan of and that I think are downright better than JEPI in several ways. So in this video, I'm going to share with you guys 6 different high income ETFs that I'm actually buying more of as of right now and slowly selling off some of my shares of JEPI to fund. Now, each one of these high income ETFs offer a ton of income generation from day one, some tax efficiency, and some potential upside. So if you want to see which 6 high income ETFs I've been buying like crazy as of recently, as I've been slowly selling off some shares of JEPI, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. The first of 6 ETFs I have been buying a lot more as of recently, and an ETF that I definitely want to acquire a lot more shares of is the Goldman Sachs S&P 500 Premium Income ETF, or ticker symbol GPIX. The GPIX's objective says seeks current income while maintaining prospects for capital appreciation. So although this is going to be more of a high income oriented ETF, because of its strategy and because of how it works, it actually also has the potential to grow over time. Now, as far as how GPIX works, it says seeks consistent monthly distributions, aims to generate consistent monthly distribution rate, generally from option premium and equity dividends, broad equity exposure with lower volatility, provides diversified equity exposure to the S&P 500, index and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative to flat markets. Now, what's great about this ETF specifically, one of my favorite parts of it is because of the strategy. If the market trades sideways, if the market trades down a tiny bit, this ETF is most likely going to outperform the S&P 500. Now, during a bull market when the S&P 500 sees a lot of upside in a short amount of time, because this ETF dynamically sells call options, meaning that it's not completely hedged, it's not completely capped as far as upside goes. This ETF will grow a lot quicker than a lot of other similar covered call style, high income style ETFs that also offer exposure to the S&P. Now, I guess maybe one of the downsides of this is that you are not going to get as much high income generation. We're talking 8.24% yield. Now, don't get me wrong, 8 or 9% yield is still a ton of income on a yearly basis. But again, there are other S&P 500 oriented ETFs out there that are seeking high income generation that are much, much higher than this. Now, GPIX pays out distributions every single month, anywhere from around 32 to 34 cents on average over the past several months. Now, because I'm relatively young at 32 years old, I do want to have some sort of upside in my long-term portfolio, although I am much more of a dividend income focused oriented investor. So this ETF sort of offers a perfect mix of income and some upside because of the strategy. Now, the next ETF I've been buying like crazy as I've been slowly selling off some shares of JEPI is GPIQ. This is the same thing as the last ETF. The only difference is it offers Nasdaq 100 exposure. Now, because it offers exposure to the Nasdaq and utilizes the same strategy, it is going to offer a bit higher of a yield because, of course, Nasdaq is higher beta. We're talking around a 10% yield, which is not bad whatsoever, especially because just like with the other one, this ETF is going to provide a lot of upside because of the dynamic call option strategy, meaning that if the Nasdaq rips in a short time frame, this ETF should follow pretty closely. The next ETF that I've been buying like crazy is OMAD Berkshire Target 15 Berkshire Select Income ETF. Another one of my recent favorite ETFs I've been trying to gather as many shares of as of recent. This ETF offers exposure to some of the top names in Berkshire Hathaway, BRK.B, but then along with that, through an option strategy, offers a ton of income generation and offers investors, as of right now, around a 15% distribution rate. And as of so far, at least, the distributions have been right on point, offering investors anywhere from around 23 to 25 cents per share per month. And honestly, I've become a huge fan of ETFs like this one and others that do offer exposure to a small, super high quality basket of holdings, but then along with that, an option strategy over top to offer investors exposure to the names within it, but then also, of course, a ton of income generation. Another ETF I'm swapping out my JEPI for is QDVO, the Amplify CWP Growth and Income ETF. This ETF seeks to provide capital appreciation and then secondarily high income, which is crazy considering the distribution rate for this one is over 9.8%. Now, the top names in QDVO are very high beta names that do have the potential to grow very quickly and of course lose value very quickly, which means the implied volatility, the IV, is going to be relatively high. Now we're talking Nvidia, Microsoft, Apple, Meta, Amazon, lots of growth names, but then along with that, individual covered calls are being sold on individual names, which are going to offer that potential for huge income. QDVO is still a smaller position in my long-term portfolio, but one of my favorites I've been adding like crazy as of recent. A few more names that I've been swapping out my JEPI for: Bali, or the iShares Advantage Large Cap Income ETF. This ETF is amazing for several different reasons. Now, first off, the investment objective says the iShares Advantage Large Cap Income ETF seeks consistent income with lower volatility than the broader US equity market. Now, this ETF offers around an 8.5% trailing 12-month dividend yield, but also is going to offer some upside too. And I mean, as an investor that is seeking income generation and some potential upside, names like these make it very easy because the ETFs are basically built to do that. Now, of course, depending on the market condition, what happens during whatever time frame, that's going to more or less dictate how this ETF performs. But very well diversified ETFs that offer upside and income and potential tax efficiency are definitely the top on my list as a reason. Now, the last final ETF that I've been buying like crazy, swapping out instead of JEPI ETF, is going to be a higher yielder, the NEOS S&P 500 High Income ETF SPYI, which offers S&P 500 exposure and a 12.15% distribution rate. Now, this ETF seeks to offer high monthly income in a tax-efficient manner with the potential for upside appreciation in rising markets. Now, because of the option strategy utilized with this ETF, and obviously, as you can see with the distribution rate, there's probably going to be a little bit less upside potential, but again, with that 12% yield, I don't think anyone's complaining. SPYI has been paying out on average anywhere from around 50 cents per share per month since inception, and it's been trading for a few years now. Now, the reality is, between all these names that we talked about, including JEPI, there's tons of great high income ETFs across the market these days, and it really is just going to depend on what you want exposure to for your long-term portfolio. What I mean by that is some of these ETFs are going to offer you a curated basket of holdings, some of them are going to offer you exposure to the Nasdaq or the S&P, but as you can see over this time frame at least, most of these ETFs have done pretty well. And before I go, I do have one last question for you guys down below. If I were to ask you to pick one ETF between these 6 ETFs, GPIX, GPIQ, OMAD, QDVO, Bali, and SPYI, which one are you picking and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.